In this weekly SMC outlook, I'm sharing my exact trade plan for the DXY, the Euro, the Pound, the Australian Dollar, and also gold for the week ending January 16, 2026. So if you're new here, my name is Justin Bennett, Forex trader since 2007, full-time trader since 2011. And as always, all of this is my opinion only and not financial advice. So let's get into the DXY 4-hour time frame. Now, if you saw last week's video, what we talked about there was how I was starting to lean more neutral, okay, after a downtrend back here. So following this downtrend, I was leaning more neutral here, and it wasn't because of anything on the chart in terms of a structure shift, okay? What I talked about there was the fact that, and I made a full video on this last week, so if you missed that, I will include that in the description. Be sure to check that out, along with all the other videos I've made. But looking here at these highs and lows during this downtrend, so we had what I like to call a distribution channel. This is not a regression channel, and it is I call it a distribution channel because if you'll notice here in a trend, we typically get a midline through here like this, and the market distributes on either side of this. So in this case, what we had here was acceptance above the top of this. And this right here was enough for me at last weekend to start looking for more of a neutral bias here for the DXY and potentially carving out a low. And that's exactly what we got. Now, last week in Discord, okay, so the perks of being in Discord with VIP members is that they do get real-time charts. And one of the things I talked about there with them was the fact that if you look back here, okay, we had an internal breakup structure back here. So this was all internal right here. Then we had this low right here. We had the market actually come up here, sweep all of this, okay, and then actually move down here and give us a BOS below this low. So what that meant is that because we had a breakup structure below this low over here on the hourly, all right, so acceptance below here, that gave us a confirmed BOS. That made this up here our external or protected high. The reason for that is twofold. One, we had the BOS down here. Two, we took internal liquidity. So that meant this up here was our external high, which meant that any close above here was enough to give us a change of character. And this is exactly what I told members in Discord as soon as we got this hourly close right here. So this hourly close was enough to show acceptance above that high and give us a confirmed change of character. So that was bullish for the DXY. It was just a matter of how far we pulled back before, potentially continuing higher. And what you can see here is that from the low, so right down here off of, let's see, this low here, up here to this high, you can see where we did get a pullback right into the upper band of OTE. Now, personally, I was looking at this area down here. I would have loved to have seen something down here to sweep these lows. In order to get long here, we obviously did not get that, but regardless, it was still the right call to, call this up here bullish. And also even last weekend, start to be more neutral on the US dollar after I was bearish for several weeks. Okay, so where do we go from here? Well, you can tell right now that we are in that kind of holiday window because the price action so far has been really choppy for the DXY and a lot of these markets too. So even though this market is trending higher, it has been really choppy. And so that's the first thing to note. Now, the other thing here too, and I've talked about this before as well, but if we look at something like the monthly time frame, and we're going to put SMC aside for a second and just look at a key level up here that is really, really noticeable. So on the monthly time frame, you have all these lows back here. And I've talked about this before, but you have this upper wick on the monthly time frame as well. The 50% of this upper wick comes in exactly at 100.8. Now, also 100.8 is the location of all these lows in the monthly, going all the way back here to 2022 and 2023. And you can also see all of these blue dotted lines, all of these are single prints, so they're imbalances in the market. We have yet to see the DXY really come up here within this recent range, okay? So what I'm kind of thinking right now for the DXY, and I thought it too, even when we were pulling back through here, I just said, all of these imbalances up here, that monthly key level that we've yet to test, we didn't test it back here. I just kind of thought that this area up here is where we're probably headed in 2026. And sure enough, I think with this reversal, that is the most likely, in my opinion, that is the most likely area where we're probably headed over the coming weeks. But the question is, how do we turn that into profit, right? Where do we look for longs on the US dollar? And again, it's a little bit difficult right now because the market has been very choppy and it's also the very start of the new year. So you do tend to get markets being a little bit sluggish and a little choppy. But if I had to look at this here, and again, I hesitate to put this up here because I don't want you guys looking at this as support and resistance. But in terms of this trend here, what I'm kind of looking at is something like this. So yes, you could technically draw this off of these lows down here and then this high. But personally, I think that it's really interesting that we have this distribution down here. We have these highs up here. So what I'm kind of looking at right now is that this is the midpoint of this, current uptrend. And so we have distribution over here. We have distribution down here to the sell side. And so then this area up here becomes my area of interest for a potential dollar pullback. So this also kind of tells me that we could just see this trend continue here into the next week or two before we potentially get a pullback. Now, that's not actionable. That's not enough for me to go out there and look for dollar, longs, because I'm not going to buy high like this. And I want to be very clear about that. So this isn't a matter of saying that I'm just going to go out there and long the dollar and hope that we hit higher, because that's not how I trade. But I do think that looking at the construct here, looking at the context of this trend, I do think that that is the most likely scenario. And so right now, if I look at the 4-hour time frame off of, this external low down here, there's really not a lot down here in this region. Now, the only area that I would look at is this one right here. This to me stands out, okay? So if we were to get a pullback, let's say next week, if we were to see the market pull back, this is an area that I would absolutely pay attention to, okay? And that's just because we have now, again, had that bullish change of character back here. And so now I'm looking for pullbacks on the dollar to get long. And we'll see the same thing on the euro, which we will talk about next. But again, I want to be clear that the reason why last week I was flipping more neutral to even slightly bullish on the DXY, although we needed confirmation of that first, was the fact that we had this acceptance here. Okay, this acceptance above the top of this distribution channel. Like I mentioned in the video last week, the full length video I made, this often gives you signals before a change of character. And that was certainly the case here, because the change of character on the hourly didn't occur until back here. And you can't see it here. This is a 4-hour time frame, but this up here was the change of character on the 1 hour. This here was the acceptance above the top of that distribution channel. So that was your early warning sign that we were likely to get a reversal. Okay, so let's take a look here at the EURUSD. And here too, we have a change of character. Now, this is the one that is debatable. And we talked about this last week, but you can see that up here off of this high, right? This is very, very close. You're talking about 1 pip above this level. And I got a lot of pushback on this, people saying, well, that's not enough to confirm a break of structure. But here's the thing. This is why I watched the DXY as well, because even though this was only 1 pip on the euro, okay, the DXY is essentially the inverse. And when we look at the 1 hour time frame here on the DXY, all right, let me get rid of this. So looking at the 1 hour here on the DXY, you can see where this is a completely different story. So back here on the 1 hour, we had this low right here. We then had a very convincing close below it. So this was full acceptance below here on the DXY. So knowing this, okay, that gave me more confidence to call this up here a break of structure, which meant that this down here was my external low for the euro. And furthermore, again, we swept internal liquidity, right? We had internal liquidity building here and once again here, and we took that out. And we also then had our break of structure. So all of this right here told me that once we closed below this area right back here, right, this was my confirmed change of character. Now you can see where we pulled back. Okay, on the hourly time frame, you can see where we pulled back here into these imbalances. So over here, you can see where we had off of this low right here on the hourly, we had this imbalance through here. Furthermore, you can see where candles like this, right, this was not retraced at all during this move. And we came up here and tagged that area perfectly and then sold off, okay? Now, like the DXY though, the price action is very typical of what you tend to get at the start of a new year. Okay, yes, we are trending lower. This is a very aggressive move, but you can also see where for the most part, it has been pretty choppy over the past few weeks, okay? So right now, I'm not as interested in the euro simply because I'm not going to chase this market and I'm not confident that we are going to get a significant pullback. And furthermore, there's really not a lot here. There's really not a lot here for me to observe and see a displacement candle. If we had a large candle back here, right, following this right here, then I could say, okay, this is where I'm targeting for a potential, relief next week and then a sell-off. But right now, there's really not a whole lot here on this chart. But with that said, though, I still, looking at this chart, we still have a bearish change of character here. And we also have some areas of interest down here in this region. So what I'm looking at now for the euro, just to kind of sum up here, right, we have the market now giving us a bearish change of character. So this trend right here is flipping from bullish to now bearish. And one thing that I'm watching here is off of this low way back here. Okay, so this low way back here, off this low up here to the high, what you'll notice is that our OTE comes in this area, okay, down here. Now, if we look back here, what you'll notice is that we have a 4-hour fair value gap. Now, I draw this right off of the high here, but the point is that this region back here has my interest. And you can see where this darker green area is our OTE. So the fact that this is right down here in this region as well is an area that could potentially come under pressure over the coming days and weeks. And if I go back here and turn on replay mode 2 and go to something like a 15-minute time frame, this is even more obvious where you can see on the 15-minute time frame when we go up there and form those 4-hour candles that we were just looking at. Okay, this is the area right down here that I'm watching. So specifically right around that 4-hour FEG. Okay, now this right here, you can see too, this is also worth watching. Notice on the 15-minute time frame, we got this through here. Okay, and we are right there in that OTE on the higher time frames represented by this darker green area. So this region right back here, right around like 115.70, 115.60, this general region, if we are going to continue lower here for the euro, this is going to be an area that I'm absolutely going to watch. Okay, so going back to the 4-hour time frame here, turning off replay mode. Again, this is the pocket right back here that I'm paying attention to. Okay, right back here in OTE. Now, again, it's not really actionable unless we get some relief here from the euro, but I don't really see a lot up here to do. And for me, the pound is a lot cleaner. I like the pound a lot better right now than the euro, and I'll explain why. Okay, so let's get rid of this here really quick and just talk through the structure here overall. So overall, if we go to an hourly time frame, this is the one I prefer for directional bias. Looking back here, we had the pound in an uptrend clearly every single time we were breaking structure back here. We never closed below the external lows down here, also called protected lows. Okay, so off of these lows back here, you can see where we got the break of structure, and we never closed below any of these lows, right? BOS up here, and then another BOS up here. Okay, so all along the way, we have not had a change of character until this low up here. Okay, so we had a clear BOS above here, acceptance above this last high. And this also qualifies because we took internal liquidity, right? We took all this liquidity out and then we formed a BOS. This is textbook. And so then you get this over here. Notice what the market is defending right now on a Friday. Okay, so we're defending this and we're literally sitting right on it at the close. So the market actually just closed a minute ago, and you can see where we're sitting right at the level. So we don't have confirmation yet to call this a change of character. But given what we've seen on the DXY and the euro, I would say it's only a matter of time. And also the fact that, look, I mean, the pound can't really get off of this level. So far, all we're doing is just pressuring it. So for me, the reason that the pound is more interesting is because if next week, so if we go to a 4-hour time frame, if next week we get a hourly close below here and confirmation that this is now our change of character and that we're changing from, bull to bear, then if we get that, then I'm eyeing areas like this back here. So what you'll notice is that these two 4-hour candles represent an imbalance in the market. Okay, so you can see that right back here, if I just draw a rectangle through here, you can see that from this low down here to this area, you have this pocket, right, where there's no retrace into this region. So this becomes an area where I could potentially short against if we get the breakdown. Now, ideally, okay, and this is just kind of my ideal, perfect world, but if we get that, then what I would love to see is for the pound to drop back here into this region. So not just close below here and then retrace, but essentially close below and come back here and retrace, into this area and then get the reversal. And the reason for that is I would love for my OTE to line up with this region. Okay, I would love to see the market do something like this down here and then come back and, tag areas like this for the short. Okay, again, perfect world there, but that would be my ideal scenario. Okay, and you can see this too on the daily time frame because we are about to get, or we just did get actually this week, a fair value gap up here. So this candle right through here, off of this low, down here, technically an area, but like I said last week in a video I made too, in my experience, these often on the high time frames, fair value gaps often fill completely. And, you can see this back here on the 4-hour time frame. So really, if you look at this is a great example. So over here, and I'm getting away from the outlook video a little bit here, but I want to prove this point because you can see here, this was the high that created a 4-hour fair value gap, right? This is where it started. Notice what we tagged here and bounced, right? Perfectly to that high. And then you look back here at this low, okay? Drag this over. This was the low that occurred right before this displacement candle, okay? So notice what we tested here before we sold off. So you can see this here on high time frames where you tend to get markets mitigating the entire fair value gap, not just the area, okay? So with that in mind, right, the reason that matters is because if I go to a daily time frame, then this area right here, what I'm really looking at is like something like this, okay? I want to see the market come up here and either tag this area or come, into this region. Then I'm looking for a lower time frame change of character. But the key here, okay, the key here is that we have to get the hourly close below this external low back here. Okay, we have to get a close below 134. That is going to be key in order to get that change of character. Okay, so let's move along to the Australian dollar, which this one also is kind of similar to the pound right now in terms of where it's sitting, because we do have a break of structure up here. And honestly, the one thing that's keeping this market afloat right now is really what's happening with the stock market. I mean, gold to a degree as well, but the New Zealand dollar and Australian dollar are very risk sensitive. So the stock market staying afloat like it is keeping this market afloat as well. But if we were to see the Australian dollar take out this low right back here, then we have a change of character. Okay. So what we've seen here on the way up is the market obviously put it in higher highs and higher lows. Now we have a BOS up here that makes this our external low. We also have the market taking out internal liquidity. So all of this points to this being our external low. So very simple, right? If we get the close below here, then guess what I'm watching? And you can already see it here on the 4-hour time frame because we have this huge pocket right up here. So from this low up here, okay, all the way over to these lows. Now, there's obviously a chance that next week we come up here and we tag this area before we break down. Okay, so that could happen as well. In my ideal scenario, again, perfect world, we come down here and take out this low first, close below here, give us that change of character, and then I'm looking for shorts against this. Okay, so that is my ideal scenario here for the Australian dollar. And then from there too, if we go to something like a daily time frame, and by the way, the Australian dollar is finally back. The reason I put it back in this Outlook video is that like back here, this was just an absolute mess for months. And I did not talk about this market for months because of this. And it seems like we're finally back. We're finally getting some nice swings from this market. So I'm putting it back on the list. But anyway, so looking at the daily time frame here from this low, you can see that from this low down here up here to our high, this assumes obviously that we're going to get a reversal. We don't know that yet. We have to wait for that confirmation. But if we do, then this areas like this down here become potential ones to watch. Okay, and what you'll notice back here is that we have this massive fair value gap off of this candle, huge displacement candle, and absolutely no retrace into it. Now, you've also got areas like this back here as well, and this one too. So there's a lot of areas here that the market may want to come back and tag. Okay, so, but that just adds fuel to, the fire if we do get that confirmed bearish change of character. But again, this low down here is going to be the one to watch. So this one down here, right around 66.60, that's going to be the one to watch. This is our current external low, also protected low. So this one here, if we get the close below, I'm looking at a bearish change of character and then targeting those areas. But first, like I said, if we get the close below here, okay, so close below this area, this low down here, then I'm looking for a potential move up here to fill in this imbalance. And then from there, looking for a short to target some of those areas. So it could turn out to be a great short opportunity if we get it. The big question is if we get it, right? We don't know that yet because essentially you're looking at from, potentially shorting up here if we get the bearish change of character. And then you're looking at targets like, down here in this region and again, down here in this region. Okay, so obviously, alternatively, if we see this market just take out this high up here, then that's off the table. Okay, now finishing up here with gold, the market is just trending higher here. I kind of thought looking at the daily time frame, and by the way, I was never bearish on this market to the point where I was shorting it. That wasn't the point here. Last week, what I talked about was the fact that we had a bullish change of character on the daily. So this close right here above the high told us that we had a confirmed BOS on the daily. So all I was looking for was potentially a move down here into this region because I thought it was interesting that from this low down here, external low to external high, you can see that the OTE here is sitting right there where a bunch of sell side imbalances are. So, we could still get it. We could still get the market actually respecting this level and just, rotating lower here. But as far as being bearish on gold, I mean, being bearish on gold or silver is not a great position to be in right now. So I was never bearish on this market to the point where I was shorting it. But I was potentially looking for a pullback into some of these imbalances. Now, if we are going to continue higher though, looking at the hourly time frame, what you have here is a confirmed bullish BOS on the hourly. So looking at this now, if we are going to continue higher and just grind higher like gold has done now for months, then what you're looking at here is potentially from this low down here, external low, swept internal liquidity, got a confirmed BOS up here. If this is going to be the high and we get a pullback, then this area down here is the one to watch for next week. Okay, so if we do get a pullback, then you've got areas like this down here, this imbalance down here right there in OTE. So potentially if we get a pullback, this is the one to watch right around 4,400 or 4,440. So that's what I'd be watching for, a potential low time frame change of character to get long back toward the highs. Obviously, if we come down here and then violate levels like this down here, this external low, then that of course could set us up for a larger pullback. Okay, and obviously this depends too on where this high is. We don't know yet if this is going to be the high or not. We could come up here and take out this high next week and then, pull back again. But the point here is that if you're looking at this as a bullish structure, which so far it is, then this is the area, at least for me, based on my rules, that I have to wait for gold to pull back into to look for a low time frame, buying opportunity. Furthermore, I would want to see these lows down here get taken out before looking for a buy. Okay, so overall, still looking bullish here. The question though is, when we look at this on the 4-hour time frame, the question is, can gold take out this high back here? Or are we still in this kind of leg where we get this displacement down and then this is all just relief here before a potential rotation lower? But again, I am not bearish on gold. I'm not shorting this market. But if we were to get the pullback next week into this region here though, then I would be looking for a low time frame buying opportunity. All right, so that's it for today's video. I hope it helped. If it did, be sure to subscribe to the channel. Also check out this video right here where I explain that distribution channel in detail. It's going to help you to identify reversals in the market before a change of character even happens. So my name is Justin Bennett signing off here. Have a great weekend and I will talk to you again next week.